So we're talking about long-term care, but I don't want our viewers to be confused. I'm not a fan of traditional long-term care insurance. You may say, well, David, you must be talking about long-term care insurance. No, I've seen nightmare stories with long-term care insurance. The insurance companies raise premiums every year, raise it to a point that you can't even keep the policy in force. And a lot of times the insurance companies know that. They want you to cancel the policy after they've taken all your premiums, unfortunately. So we've talked about this before, but there's one type of long-term care policy I love. It's called a hybrid insurance policy. And what this is the reason I love it so much is your premiums are set for a set period of time. I'll give you an example. A 65-year-old may put $10,000 a year into a policy for 10 years. So if my math is correct, Amy, make sure I'm right on this. $10,000 a year for 10 years, that's $100,000 into the policy. So, and that's it, they're done. So the insurance company can't change the premiums, they can't change the amount, and they can't change the term, it's fixed. But that same 65-year-old, when they're 85 years old, that policy will pay out over $7,000 a month for up to 6 years. So if you do the math on that, that's well over $500,000 in long-term care that's paid out to the policyholders. We put in $100,000, we're getting out 4 or 5 times that amount. But here's the other part I love. What I hate about traditional long-term care insurance, Amy, is it's almost like car insurance. I don't really want to pay for car insurance, but I got to have it, right? Because if I'm in a collision or something, I got to be able to repair my car. But if I never get in a car crash or have damage to my car, does the insurance company give me back all the money I paid in car insurance?
Would be nice.
It would be nice. No, they don't.
It's a good idea.
This type of hybrid policy does. So let's just say you put in this $100,000 in this policy and you live a great, healthy life. You never needed the care. Guess what? The $100,000 that you paid in premiums goes back to your kids or your grandkids, tax-free as a death benefit. So at least you have some confidence knowing, even if I spend money on this, I still may be able to get some back in the future if I don't need it.
We don't have a lot of time left, but